A Connecticut man has been warning the public, get your money out of U.S. banks immediately. A historic financial reset in 2023 could cause a run on the banks unlike anything in our nation's history, he says. His warning has already reached 8.4 million Americans and 30 TV networks. And yet, few people realize this could actually happen on U.S. soil, or what a sizable impact it could have on your wealth, especially if you have large amounts of cash in the bank right now. Normally, I might ignore all this, but it turns out he's a Wall Street legend whose work predicted the COVID crash, the 2022 crash, and the 20 best stocks of 2022, and more. Today, he's urging you to move your money into a new vehicle 50 years in the making. He's even posting a free recommendation, which you can access at reset2023.com. His work pointed to a 10,090% gain back in 2020, so don't miss this. A new vehicle outside the banking system could massively boost your wealth. You can get the details today at reset2023.com. Again, that's reset2023.com. Hi, this is Daniela Cambone. Welcome back to the Daniela Cambone Show. Joined today by Carly Garner. She is the author of Higher Probability Commodity Trading, also the founder of thecarlytrading.com. It's been a long time, Carly. So good to see you. Welcome back.
It is, ditto. It's good to be here.
Yes, well, a lot of ground to cover today. As we're speaking, the Dow, S&P, NASDAQ, all under pressure. How much is this China wild card weighing on the markets right now, Carly?
Well, I think that's part of the story, but I think when it comes to the S&P and the stock market in general, a lot of it is the U.S. dollar. The U.S. dollar has really been holding most assets back this year due to high valuations. The dollar has come down in recent months, but the reality is it's still really high, probably far too high for healthy risk asset markets. So I think that's helping us out a little bit as far as the S&P goes, and also a lot of it's just technical. If you look at a weekly chart, you can see that we're coming up against some really heavy resistance around the 4100 area. There's a couple of trend lines on a weekly chart that come in there. One is the downtrend line that started early last year and has continued to hold through this particular point. And the other is there, on the chart that I'm displaying, there's a blue line, and that dates all the way back to 2018. That was basically the trading pattern that the market had been in prior to all the COVID stimulus and all the government stimulus that pushed us up above that trading range. So that's going to be a really heavy pivot number. As long as the market stays below that, I think we continue to see some pressure. If we can find a way to get above 4,100, then that's actually pretty bullish. Fundamentally, I think there's definitely some question marks above the market, and so I'm not sure we can do that without a little more turmoil. Normally, markets do pretty well in November and December, but come January, February, they tend to struggle, and I think we're going to see that in the first quarter. The market has a tough time getting out of the hole.
I know right now nothing seems safe, but are there any sectors you're eyeing that look better than others, Carly?
I pay attention to the indices overall, not any individual sectors, but with that in mind, I think it's fairly obvious that the consumers are going more towards staples and away from discretionary items. And so I think that's playing a part. And there is a really big disconnect between oil stocks and the oil futures market, which has been selling off for several weeks while the oil stocks have been going up. And that disconnect's unnatural. To me, it just says that investors are starving. They're desperate for a place to put their money. Oil stocks have worked, and so that's where they're putting money. Until that stops working, that'll probably continue to be the case.
I'd like to, obviously your specialty is commodities, and we're going to take a deeper look there. But I'm curious to also get your thoughts on what's happening in the current crypto environment. Obviously, the tail end of this year has been devastating and such a blow to the industry. So if we're looking at Bitcoin specifically right now, we're talking it's still under pressure, tremendous pressure. There's talk it's going to head to 14K. Curious to see where you see it projecting to.
So, to be honest, I don't have a fundamental opinion on Bitcoin simply because I have a hard time finding the intrinsic value there. I know that the technology for crypto is definitely valuable. I'm just not sure any one particular coin is going to make it through the wash. I mean, we saw this in the dot-com bubble. A lot of those tech stocks failed, and it paved the way for other companies in their wake to be very successful. For example, a prominent example is I think it was Pets.com failed and now Chewy.com is thriving. So just because certain coins are around today and being traded today doesn't mean those are the ones that are going to survive. With that said, as a speculative asset, Bitcoin's something that everyone wants to talk about, and a lot of speculators are very interested in it. So I do chart it. I personally think that we have a chance of seeing 8,000 in Bitcoin, and that puts us back down to a really long-term trend line dating back to 2019. And to be honest, I think that might be what it takes to wash out the rest of the weak hands and kind of get the market on more solid footing. Until that happens, I'm not sure I'd be comfortable speculating on the long side. But Bitcoin's a market that's full of surprises, so all we can do is take it day by day.
Like 8,000 on the downside definitely beat. I had Gareth Soloway on a few weeks ago. He's still eyeing 10,000, and I thought that was uber bearish. But on the long-term trend, I have the folks on that come on saying, all right, it's going to go to 10, but eventually get back to 100,000, which
Right.
is basically, speaking in extremes here. Long term, are you bullish Bitcoin? What do the charts tell you?
Well, the chart tells me that it's probably a good buy somewhere between 12,600 and 8,000. I would lean more towards 8,000 to be honest. From there, I don't think the upside has nearly as much potential as what we've already seen. So I wouldn't expect 70,000 or maybe even 50,000. Maybe we kind of retrace half of that sell-off, so it puts us somewhere in the 40 or $50,000 range, possibly. That said, like I said before, it's more of a technical speculation, not a fundamental.
Right. So you're saying any curveball could be thrown that would completely
Of
change those
course.
numbers. So let's talk gold now. So I know you chart that closely. Curious to get your thoughts on gold as we close out the year here. A lot of folks disappointed in gold's performance this year. What's your take, Carly?
Gold has been a very disappointing asset. And I know a lot of very smart traders and experienced traders that have had a hard time with gold and silver markets because they really aren't behaving the way you would expect them to in a war environment, in an inflation environment. But I believe that the US dollar is what's really holding gold back, along with other assets. Like I mentioned before, stock market and treasuries are suffering because of the higher dollar valuation. But I personally think the dollar is in the process of rolling over. And if that is the case, that should basically unhitch the plow on gold and silver and allow it to move higher in sympathy to some of these fundamental stories that just haven't panned out thus far. So although gold's underperformed in 2022, I think 2023 is going to be a good year for gold and silver. In gold, the pivot number I'm looking at is about 1775. This is basically was the uptrend line dating back to 2018, 2019, and it did break through earlier this year and fail, but we're coming back and retesting that now. Generally, from a charting standpoint, previous support becomes resistance. So that 1775 area is now resistance on the way back up. And I'm also seeing some moving averages coming into line at around 1800. So if we can break above 1800, I think gold's got a good chance at retesting the old highs, actually going a little higher, maybe 2100 by some point next year. Another thing to keep in mind is the seasonal bottom for gold is mid-December. So seasonals are tricky. Sometimes they're early, sometimes they're late, sometimes it doesn't work at all. But most of the time, if you're looking for a place to get long gold, if you do it in early to mid-December, it's usually a good long-term position.
Okay, how about on the silver front then, Carly? Are you as optimistic? You always say silver
This
follows gold.
It does. So silver is interesting. The silver chart is actually a little more constructive than the gold chart is in the short run. This is a daily chart of silver, and you can see that we've kind of broken a downtrend line earlier this month, actually last month. And that so we're in a breakout phase, and as long as we hold above 2050 in silver, I think the path of least resistance is higher. If we can break 2245, I think we finally get what all the silver bugs have been calling for all year and just haven't been able to make any progress. I think we get a move back into the high 20s, maybe even the 30 area.
Maybe even the 30 area, Carly.
Maybe. Next year, yeah, this is gonna take some time, and assuming I'm right, and for this to happen, the dollar's got to roll over, and I think that it will.
Yeah, and I'm curious. I mean, do you have any thoughts as to why you think it's going to roll over here?
So a lot of the dollar rally, there's a couple things working in favor of the dollar. Obviously, interest rate differential and the Federal Reserve members continuously talking the market, talking treasuries down and talking the dollar up. But I think that a lot of that has already been priced in advance. And then we also had some flight to quality. The US dollar tends to be a quality currency. So when things are hectic around the world, people put money into the US dollar for safety reasons. So that I think has already played itself out. And if we look at a weekly chart here, the highs from a couple of weeks, well, a couple of months ago, we're basically right up against a trend line. It temporarily poked out above it, but then it closed the week below it. And that was a very bearish signal, in my opinion. And so now we're coming up against the basically the area that the market broke out in 2022 with the Russian invasion of Ukraine and all the Federal Reserve actions and all those sorts of things came into play. The dollar broke out of the previous trading pattern. And now we're coming back down to test that pattern. So the previous resistance is now support, and that comes in at about 106. If we can get a weekly close below 106, which I think is in the cards, it may not be in the next week or two. Maybe it takes a month or so to do it. But once that happens, I think the ball starts rolling down the hill and we start making our way towards 97. And that would basically just allow everything else to float higher. And we're talking about basically all asset classes. Maybe not stocks right away. That'll be the slowest or the last to respond. But treasuries, metals, copper, silver will all benefit from that.
But not Bitcoin, based on the chart.
Maybe not Bitcoin. Maybe not Bitcoin. No.
Okay. Let's get back to our commodity lister for a second. Curious to get your thoughts on copper. Had a lot of experts on uber bullish copper. Interested to know whether you are or not.
The fundamental story for copper is pretty compelling. I mean, copper is an industrial metal. There's a lot of qualities as far as EV vehicles. So a lot of the new Green Deal and that sort of stuff is going to help the demand for copper. The one thing that's holding copper back is probably the economy itself, which is showing signs of slowing down, and the China story. But I think all of that eventually will work itself out. And so I think in the long run, anybody that's looking to play the upside in copper, probably look for some support around 350, maybe 330. Somewhere in that range should be a good long-term buying opportunity according to the chart. And I think the fundamental story supports that.
Yeah, I feel like when it comes to the EV story, at least for me, I feel like I've been hearing it for so long that we've been waiting for this breakout from the battery metals and copper. But you feel that it might finally be all aligned now?
Well, I agree with you. We've been hearing that for years, and it just, copper fell flat, and a lot of the metals did as well. But I think most of that had to do with the dollar or the higher interest rates. So once we work out the interest rate picture normalizing and the market's basically standing on its own 2 feet as regards to fundamentals and not being held back by a higher dollar, I think that story finally allows itself to play out.
So just getting back, Carly, to your just some thoughts from the Fed. Obviously, 50 basis points seems in the cards for December. Any thoughts or speculation as to where their head might be at?
It's really hard to. The Fed has been extremely transparent. In fact, in my opinion, too transparent. It's almost like instead of just letting us know what their intentions are, they're actually talking the market into their narrative. And so I'm not a big fan of that. So that said, I think that the Fed's probably made it pretty clear what they're doing and where their intentions lie. I'm just wondering if maybe they've done enough already, or maybe even too much, and we haven't seen the effects of it. I mean, interest rate hikes take a long time to work their way through the economy, and we're starting to now slowly see the results of their actions. And I'm just wondering if maybe they should be tapping on the brakes. But my opinion doesn't matter. So as far as I can see, they're full board ahead.
Yeah, and that would also be a bullish case for gold if they were
Correct.
to
I agree.
put those brakes back on. Carly, I guess just as we wrap here, and I thank you for bringing all these great charts. Final thoughts for investors here, as you know, I started by saying we're wrapping the year, about to begin a new one. What should investors be really paying attention to, eyeing, thinking about?
Well, as I've mentioned earlier, I think the dollar plays a key in everything. If the dollar continues to behave itself and again close below 106, I think that's kind of a green light to start putting money to work in just about all asset classes. I think treasuries are probably one of the better plays on the board because you get paid while you wait. You earn a yield, which is the best we've seen in a long time. And if something does happen in the economy, something happens globally that shakes things up, you probably get some price appreciation as well. So I think that's probably the best play on the board for investors. For speculators, I'd say the metals are probably a really great place to look. As long as we hold support lines and the seasonal lows come into play, I think those are good plays going into next year.
I appreciate your thoughts. Carly Garner, DeCarlyTrading.com. Thank you so much. Come back soon. Let's not wait this long.
Absolutely.
Awesome.
Yeah.
Thank you, Carly. Happy holidays. And thank you all for watching. We'll have more great coverage coming your way, so be sure to stay tuned to the Daniela Camboni Show and sign up at DanielaCamboni.com so you get notified every time a new interview comes out. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.